Hello and welcome to CryptoWeeklies. My name is Josh and today we are going to discuss VeChain, its AI-based forecast regression analysis. None of the content is financial advice, it's our machine learning and statistical models. Using historical data, we predict future for VeChain. Why are we talking about VeChain today? It's one of the rallying cryptos over the last 7 days, 17% rally, price still under 2.7 cents, market cap of about 2.2 billion, volume about 35 million. And you can see for this one this crypto has a maximum supply, which is one of the criteria which bodes well for analyzing crypto, to have a maximum supply and also circulating supply above 93%, which is a good sign, a very good sign for this particular crypto. In terms of price versus market cap growth over the last 1 year, the price grew from 1.4 cents to about 2.8 cents, so about 2x from bottom to today. In terms of market cap growth, the market cap grew by about $1.1 billion to about $2.2 billion. This means that the growth in market cap gets reflected in price for this crypto, at least over this 1 year. That means the impact of any token dilution is minimal on price. So people who are buying or holding this token are not losing the gains of the market cap growth simply due to the dilution of token. So with this analysis we can continue. The tokenomics for this crypto, again, about 86 million max supply, about of which 81 billion are already in circulation. So going forward to analyzing, this is our website, analyzes all major cryptos, conducts AI based forecast and also regression analysis. We'll start with the regression analysis for VeChain and then go to the AI based forecast. The price action that we just saw, about 2.7 cents, is about, for our polynomial regression function, which is wrapped around the price action of VeChain at a weekly level. And you can see the base function is the line in pink. Above this base function there are three lines, the yellow, orange and red, which are 1 standard deviation, 2 standard deviation, 3 standard deviation increment on the regression function to the upside. Similarly, green, light green, dark green and blue are 3 standard deviation decrements to the downside. The purpose of this analysis is to check whether in terms of the relation of price with respect to time, this is a polynomial relationship because the price does not always tend to go up with time, but has a downward trajectory as well as upswing during the bull market and during the bear market. So since the bear market ended about August or September of 2023, this particular crypto has been in an upswing on its polynomial regression analysis. It did touch the 1 standard deviation peak back in March of 2024 when the price was above 5 cents. Right now the 1 standard deviation peak is at around 11 cents. As this is because as time proceeds and if the market is an upswing, the regression function values are also increasing, whereas if the market if the token is in a bear market, then the values would be decreasing. Right now the price action is slightly below this 2 standard deviation band, so which means that this historically speaking the price is about 95% times under this 2 standard deviation band. Again, this means that right now the price is undervalued with respect to its historical prices. You can see whenever we visit these 2 standard deviation bottoms, the price mean reverts back to either the 1 standard deviation bottom or then the fair value of the fair value band. So what are the values for the fair value band? Around 7 cents. The 1 standard deviation bottom is at around 4.3 cents. So that's again about a 2x for 1.7x to get to the 1 standard deviation bottom, and well over 2x to get to the fair value, back to the fair value. Again, this is an increasing function, so as long as the integrity of the market stays intact, these values should also go up. If you are interested in following daily updates to this band, you can use the website on the bottom of your screen. The website is free and you don't have to sign up for anything. And also, if you like the content, please give us a like and subscribe to the channel. Now we'll go to the AI based forecast for VeChain. We had conducted this today. This is the AI and machine learning model trained on the weekly price action of VeChain starting 2018. Week by week prices known by the model, and this model comes up with the three scenarios: the bull case, which is in green, the bear case, which is in red, and the base case, which is in orange. And the purpose of this analysis is to have an idea of what is a theoretical ceiling if the bull market were to come back, or what is a theoretical support if the bear market were to continue, that is the bearish phase of the market since March of 2024. So again, no one can tell what will happen to the price tomorrow, but the idea is to be prepared for no matter what happens. Again, this is one standard deviation confidence level, like the bands that we saw previously, the yellow and the light green band, under which about the price stays under these bands about 70% of the time. So the key idea is, even if the price go above these bands in a bull market or below this band in the bear market, there is a strong tendency of the price to come back to these bands. So for this analysis, the base case scenario for again, none of this is financial advice. The base case scenario per our machine learning model for VeChain is between and its token VT is between 25 and 27 cents, which is coincidentally close to the current price. So this is in case of sideways market, the base case scenario does not forecast any increment to the price action till about December of 2024. Whereas if the market were to rally, the one standard deviation bull case per hour model is at between 3.1 cents and 6.5 cents. So this again, this model, the ceilings are incrementing as we proceed further in time. If you are interested in knowing the numerical values, we do have a table for it on the website. In terms of the bear case, and the support going forward till December is between 1.25 cents and 2.45 cents. So these were the values in a pictorial view, but if you are interested in tabular format, this is also available. We'll plan to integrate both the tabular and graphical view in one single view. In terms of understanding if VeChain is overvalued or undervalued, we'll look at it a bit later. Right now we'll look at the simple moving average, and this is the analysis, or this is the price of VeChain color coded by the difference between the price and the 20-week simple moving average, and the risk levels are normalized between 0 and 1. The key idea over here is when the risk levels are low, dollar cost averaging makes more sense, but this is not the only only indicator for the dollar cost averaging strategy, because what tends to happen is, you can see over here, when the risk if you were to think that the risk levels are at the lowest between 0 and 0.1, you would be this analysis would flash low risk territory in the middle of bear market, not towards the end of it, because what happens towards the end of it is, the bear market is that the price is fairly close to the 20-week moving average. So per this analysis, what tends to happen is, if the risk level is between 0.1 and 0.2, and if we had recently visited the 0 and 0.1 risk level, that slightly makes things more lucrative. Right now the risk level is at 0.2 risk, which is the second best time to DCA per this SMA analysis. But what we have done is, we have added the impact of time, the fair value regression model, and the difference between price and the polynomial regression model. This is our DCA model. This is primarily considers the low risk phases and the high risk phases for DCAing out of the market. For example, in this zone, when the color codes are red in April of 2021, the difference between the price and the polynomial regression function was highest to the upside. Similarly, when the price capitulates substantially below the fair value regression model, you can see that even in an upswing over here, these were some of the good times to buy per this model. Right now we are in a similar territory. The risk level is at a 0.02, that is between 0 and 0.1, the lowest risk band, And if we were to have a confluence between this DCA model and the SMA model, that's when most of the bottoming scenario. So for example, this particular SMA model says the price is at the second best time to DCA, and if the DCA model says the price is the best time to DCA, that makes more sense than relying on only one indicator. We definitely plan to integrate all of these indicators into one single unified indicator, but again that is the future growth for the website and for the channel. So if you're interested, please subscribe and stay connected. In terms of discerning whether VeChain is right now overvalued or undervalued, this particular analysis will definitely share towards the end of the video. This is currently in development. In terms of looking at the wider market over the last key periods, the machine learning based model has come up with script narratives and news related to crypto over the last 24 hours on platforms such as YouTube and other internet platforms, and come up with a single score of the sentiment as around 51. That means it's kind of neutral. There are bearish narratives, but there are a lot of bullish narratives. You can go through them, each of them. So for example, Bitcoin controlled by the tether, this is critical for Bitcoin. These are some of the bearish narratives. US inflation falling, which is good for crypto in the long term, in the short term, but not that great in the long term. So this is again one of the other indicators, which is a normalized composite risk score between 0 and 1. This color codes the phases of the market into lowest risk, low risk. Right now we are in the low risk regimen. You can see over here since early July of 2024 the risks are between 0.1 and 0.2. The key idea is dollar cost averaging when the risk levels are low. So for example, when the lowest was the blue color in July 2022 and till about October of 2023, also early January 2021. So that's again a great time to dollar cost average. This is calculated by using top 100 cryptos, analyzing their price and several risk metrics such as alpha, beta, volatility, risk adjusted returns, and as well as percentage drawdown and Sharpe ratio. In terms of where we stand are again the latest risk score is at around 0.18. This means that it's in the green territory, and that's again not financial advice, but the second best time to dollar cost average per this model. In terms of the popular narratives over the last 7 days, the narratives which have gained some popularity is definitely Bitcoin leading the pack, Ethereum with its ETF related news, altcoins, and again the bearish sentiment has taken a lot of footing in the market. The bullish sentiment is kind of a smaller narrative. This is all of the discussions related to crypto in the last 7 days related to crypto on YouTube, and you can see another narrative ETF related discussion is getting somewhat attention. Solana is again getting Solana, Cardano, some of the other altcoins are getting attention. Similarly wider news related to the Fed, as well as bottom related analysis, recovery related, and some of the popular names related to crypto are also over here. So this is again one single snapshot to analyze what is happening in the market. This again gets updated every single day and takes a look back of the last 7 days worth of popular narratives. In terms of where we stand, normalized risk for Bitcoin and ETH, this is important for altcoins because altcoins tend to follow when Bitcoin whatever Bitcoin and Ether are doing, because they're highly correlated. This particular analysis helps us to determine which phase of the market we are in. Are we in terms of the difference between the price of Bitcoin and Ethereum and its 20-week moving average respectively. We are in terms of Bitcoin, we are in a low risk territory. The risk score for Bitcoin per its SMA analysis at 0.23. This is the second best time. Again, per ETH is slightly high risk at 0.34. Again, the key idea is when ETH's risk is below Bitcoin's risk, that is again a great time to dollar cost average altcoin. But right now we are not in that phase. Now last but not the least, we'll try to discern the come back with the discernment model. This is again not updated yet. It's finally here. Per this MVRVZ analysis, the price which is in blue and the red is the MVRVZ score. As the red line is below this zero line, that means per the MVRVZ analysis, VeChain is right now undervalued. So to summarize everything, DCA model at the lowest risk level for VeChain, the SMA model at the second lowest risk level, but the regression analysis price below 2 standard deviation bottom per the polynomial regression analysis, for the crypto eval MVRVZ score based model, VeChain at undervalued territory. The AI based forecast for VeChain in a bull case is at around 3.17 and 6.67 till December 2024. The bear case between 1.7 cents and 2.4 cents, and the base case is essentially flat at around 27 cents. Sorry, 2.7 cents. So with this, I would like to conclude the video. Hope you like this content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.